On the Spot with Michelle McCory is brought to you by Swan Bitcoin.
Welcome back. We are continuing our conversation with Matthew Piepenburg, partner at Matterhorn Asset Management, which specializes in wealth management and wealth preservation for high net worth individuals, family offices, and institutions. Matthew is also the best-selling author of Rigged to Fail and Gold Matters, Real Solutions for Surreal Risks. Now, before the break, we were discussing how one of the top-performing assets this year has been Bitcoin. It's up around 150% year to date. It's now at approximately the 42,000 level, and it's also expected to benefit from the Fed cutting rates, as we talked about in part one, and even the possibility of QE happening in 2024. Now, Bitcoin is up due to many of the same factors that are driving interest in gold. Similar ideologies, Bitcoin regarded as a sound money. There's limited supply. Only 21 million Bitcoin can ever be created. It's seen as a hedge against fiat debasement and devaluation, a hedge against inflation, a store of value asset that is decentralized. And it is expected to benefit from these rate cuts and the Fed pivot and ensuing liquidity that many in the markets are expecting for 2024. Now, of course, Bitcoin has been rallying recently on expectations of a spot Bitcoin ETF approval. There are some developments on that front, with BlackRock updating its proposal, introducing cash redemptions to align with SEC preferences. And this revision is seen as a strategic move to further enhance the likelihood of approval for their ETF. The SEC favors cash redemptions because they're considered safer and more accessible. So this is seen as improving the likelihood of a spot Bitcoin ETF, which many are saying is a matter of when, not if, and that when is expected early January. This is going to make it easier for retail investors to get into Bitcoin. It also opens the floodgates for institutional investors. So Matthew, given all of this, what is your read on Bitcoin?
Yeah, look, I'm not a Peter Schiff or a Jim Rickards. I don't make fun of Bitcoin. I'm not doing that to be Swiss and neutral and just conventionally kind.
Even though you're in Switzerland, yes.
I have great friends like Ronnie Sturfalo who understand Bitcoin very well, who also understand gold, or Larry Leppert understands both. I don't think you have to hate Bitcoin and be a supporter of gold. I think, look, Bitcoin is way too important to be dismissed as a poker chip, as Jim Rickards says, even though fundamentally he doesn't see any comparison between gold and Bitcoin. We can't ignore that Bitcoin is a phenomena based out of the same kind of intellectual narrative that real God-given gold is based out of. It's got a finite supply and technically an infinite duration, unlike an IOU or a paper fiat dollar. So I don't think we can just poo-poo Bitcoin because it's not as shiny or as historically relevant as gold. It has a role. There are people who have an intellectual desire to see some type of decentralized currency outside of the fiat system or the central bank corrupted system, to have something outside of a fractured banking system. And for many, it's far easier to get a digital wallet than to come to Switzerland and pay $5 million to put gold in the ground. I get it. So I'm not making fun of Bitcoin investors. And I also don't think that, the headlines, whether it was FTX or Binance, which Janet Yellen pronounces Binance. I mean, my God.
Binance, yeah.
But, these headlines, the FTX headlines, that was classic Ponzi scheme, commingling of client assets. That's not about Bitcoin. That's about Sam Bankman-Fried being a fraud. That's all it is. And, even Binance, look, with CZ, look, there's different ways to spin it. He's got a $4.3 billion judgment from the Department of Justice because he didn't handle AML and KYC regulations. Pretty stupid. It's a $4.3 billion fine. And in money laundering, know your client regulations. Yet it's so ironic that CZ was the same guy that kind of reminded the crypto world, hey, those guys over at FTX, they're missing $8 billion. I mean, all's fair in love and war. CZ was instrumental in bringing down Sam Bankman-Fried. Now he gets a $4 billion fine. I mean, karma's kind of a bitch, but CZ just says he needs to relax because even for him, 4.3 billion is nothing. I think the problem with Bitcoin isn't Bitcoin. It's these exchanges and it's the people managing them that have some risk. Now you could argue the Adam Newmans of the world and the Sam Bankman-Frieds of the world aren't the same as the CZs of the world or the Sam Altmans. I think they're all kind of in the same book. They're ethically integrity challenged individuals, but they're very financially successful. Again, how you measure success shouldn't just be by dollars, but that is the world we live in. I think there are ways to put a good twist on this whole narrative. I mean, CZ was leading an altcoin wave, which is taking a lot of sucker money into altcoins that really weren't going to make any money for the investors, but were a big source of profit for CZ. And I think the fact that his wings have been a little clipped by this $4.3 billion judgment while he's relaxing, maybe will take some of that energy away from these altcoin kind of scams, I would, Carl, and put more focus on Bitcoin. To your point, though, what's happening to BlackRock? And again, Larry Fink in 2017 was castigating Bitcoin as just a symbol of money laundering. He was making fun of it. Now he's looking to buy 4 out of 5 of the biggest Bitcoin miners, and he wants to get a spot, Bitcoin ETF, because there's money in it for Larry Fink. Suddenly his intellectual views, his integrity, his arguments have shifted where there's an opportunity. The problem with that, if depending on the market cap size of this potential ETF, or this Bitcoin ETF, is then it kind of, in my opinion, the whole decentralized argument of Bitcoin is challenged then. And then you're saying, are you really into Bitcoin for the intellectual and strong conviction against a centralized state and a centralized bank and a centralized control of your money? Are you in it for speculation? I think there are 2 different flavors of Bitcoin investors, like there are 2 different flavors of gold speculators. There's far more money to be made speculating on cryptos than there is in physical precious metals, far more money. But if you're really truly a Bitcoin buyer because you want to be decentralized, what Larry Fink is doing is the opposite of your goal. And that's, again, a challenge. I will say, I'm not here to say that Bitcoin won't be a store of value or won't be a medium of exchange. I don't go to Costco. I don't go buy my cars with bars of gold either. So and I know that Bitcoin doesn't have yield, neither does physical gold. I will say that central banks aren't buying Bitcoin, they're buying physical gold. There's a reason. That doesn't mean Bitcoin's a joke, or if you invest in it, you're wrong. I also will say that a lot of times I'm in Switzerland, I'll meet clients who made millions of dollars in Bitcoin who want to convert it to gold, because deep down they're admitting that they were speculators. And so when they want safe money, it goes into physical gold. I took my S&P lottery ticket window or NASDAQ lottery ticket windows and put it into gold too, because it's better money than my dollars in a bank. It's better to have it in a hole in the ground somewhere staring back at me with no yield, because it just holds its value better. Right? Again, there are Bitcoin true believers who do it for political and philosophical and historical reasons like gold, but there are speculators too.
Yeah.
And, it just depends on what's your profile. I happen to be into preservation and philosophy more than speculation at this point in my life. It doesn't mean those people are wrong to try. I hear a lot of people looking, sadly, as they get more stressed financially. I talked to guys this weekend. They're going further and further on the risk branch, for better or for worse. Because they're more and more broke and they need something. And to some, I think Bitcoin will do well as the NASDAQ does well, because it trades like a tech stock, but it'll also do well if the dollar gets weaker. So it's an interesting play. It's incredibly volatile, and its long-term survival is not for me to determine. Michael Saylor will tell you one thing, Peter Schiff will tell you another. I'm taking the Swiss initiative in the middle, but I will say, and I'm not meant to be sarcastic, central banks aren't buying Bitcoin. And maybe that's not the final answer. Maybe that's temporary.
Yeah.
But El Salvador, certain
Right.
really sad, tragic cases in Latin America. Again, I'm not making fun of that. I'm just saying realistically, and I think if Bitcoin becomes too powerful, you're going to see more legislation because it's too strong a threat to the US dollar, just like gold was. And that's why you see the COMEX manipulation of the gold price. If you have a Bitcoin ETF or Bitcoin becomes really predominant and really important, it's a threat to the broken system, the broken faith in our broken currency and our broken central bankers who have way too much centralized control of our economy. And we will see central bank digital currency in the next 3 to 5 years. It's almost obvious. And that will become just another way to get around Bitcoin. Again, I hope I'm wrong on that. I really do. Centralized digital currency is an anathema. It's a horror to free market price discovery.
Absolutely.
But I sadly hope I'm wrong on that, but I see it as somewhat inevitable. So again, will that be a challenge to Bitcoin? I don't know. I don't want to see Bitcoin get beaten down. I don't. I'm the gold guy, but I don't have an argument or a ridicule or a sarcastic view on Bitcoin anymore.
Look, you made some very, very, very valid, excellent points there. I was certainly very much concerned about a central bank digital currency. I've also raised the concern of the decentralization nature of Bitcoin perhaps being threatened as these big institutions come in.
Yep.
But in terms of a risk asset. The Bitcoin maximalists will say, whilst it hasn't, of course, had anywhere near a track record of gold, I mean, it's like absurd to even put them in the same category, that it is being seen as a store of value asset. And, they would say it's going to be a matter of time when central banks do also look at adding Bitcoin as reserve assets. Again, that's very much in the future. But broadly speaking, many at this point, and you mentioned like the likes of Larry Lepard, who is very much a big gold fundamentalist, but also very much into Bitcoin. Many, including the top analysts at Bloomberg, are now saying that it's in fact riskier to not have any exposure to Bitcoin at this point than to have limited exposure. That you should at least look at maybe a 4 to 5% allocation to Bitcoin, even lower, but having no exposure to Bitcoin. The main consensus now is that that is just too risky a move. What do you think about that?
I mean, look, gold is 0.5% of global financial assets in portfolios. It's almost not even there. So for me to say go 5% Bitcoin,
less on the percentage, but more on the idea of should a portfolio at this point, we know gold should be in there for sure. And by that, we mean strongly physical gold. But should a sound portfolio at this point also have some kind of allocation to Bitcoin?
Again, it depends on, and again, I'm not trying to escape the question. It depends on the profile of the investor. There's more than one type of investment. There's more than one type of investor. Speculation, preservation, high risk, low risk, age group, tolerance, sophistication. I'm not trying to avoid the question. For someone with a decent amount of money and a higher risk profile, of course, I'd rather have Bitcoin than junk bonds. I would. And you could say, well, don't compare Bitcoin to junk bonds. But in terms of risk and return, risk and reward, and in terms of volatility, you could make that case, although even junk bonds don't have any volatility when there's a Fed always there to pump up the bond market. Even junk bond yields were getting you nothing. They were like high yield bonds were low yield bonds. There was so much desperate search for any kind of return in a completely distorted bond market over the last 10 years. But Bitcoin volatility has to be understood. Even the biggest Bitcoin aficionado has to confess of its volatility. Much more volatile than even the 10-year treasury this year in the bond market and the notes. Although at the short end of the curve, there's great volatility. So I think anyone who's investing in Bitcoin who's looking for the reward, that's fine. There's volatility goes both ways, right? It goes up and down. It depends on your holding cycle, depends on your profile, it depends on your tolerance for that. It's certainly... again, Brent Johnson would say, again, he doesn't like the US dollar for a lot of reasons. He has a strong view that despite all the sins of the central banks and all the warts, the DXY could be a good investment too. Since we've talked, the DXY has gone down. But again, a low DXY will be good for the stock market. But DXY goes down, Bitcoin will go up. The question then is, do you believe in the dollar? Do you believe in Bitcoin? Or do you believe in gold? You can believe in each of those things for different reasons and be very intelligent. Which of them offer the most risk? Even if the DXY goes from 112 to 102, that's not a massive amount of risk. But if Bitcoin goes down 20 or 30% and you need liquidity, that is too hard for some. If Bitcoin goes up 20%, will you sell or will you go into volatility? It is so specific to each investor's profile, trading strategy, and gut that I can't give that advice. I don't, but again, I'm not trying to escape the question. I don't laugh at people that are going out on that risk branch or even fundamentally believing in Bitcoin as a better alternative than a broken greenback. But then there are very smart people who can say, look, I just believe in the US dollar despite its warts because it's the best horse in the glue factory. There's this great straw sucking sound in the euro-dollar market, the derivative market, petrodollar. There's a strong argument made for that. I don't agree with it, but I could be wrong. But I know that with physical gold, I'm pretty much right either way. Even Brent Johnson and I, we have disagreement a little bit on the DXY, ultimately see gold. Bitcoin is somewhere in the middle there. It could be too volatile to make a strong argument right now. And I know Bitcoin is a big topic. I do. But I can't say with a straight face that I'd recommend 4 to 5% allocation. And it really depends on the person. I see people going in for the right reasons and the wrong reasons.
I think that's a fair answer. I think that's a fair answer with many valid points.
I'm sure I've seen a lot of Bitcoin fans, but
so much more to unpack. We're running out of time, but I do definitely want to try and get your overview very quickly on geopolitics. You kind of mentioned it. I said we'd circle back to it. Certainly no shortage of geopolitical flashpoints at the moment. Yeah. Russia, Ukraine, the Israel war with Gaza following the Hamas October 7th attacks. Not clear if that remains contained to Israel and Gaza. We've also got North Korea testing ballistic missiles. We've got flares up in the Red Sea with Houthi rebels firing at ships. And there is so much to keep in mind on that front. In fact, Natixis is rating geopolitics as the top risk going into 2024. How do you rate geopolitics as a risk in 2024?
It's undeniably important. And again, impossible to predict, but getting more and more obvious. And again, I want to answer it specifically, but I'll start at 30,000 feet at a macro level. It's no coincidence to me that as we're going broke and as we're debasing our currency, we're also seeing more extravagant war talk, drum rolls, and more fissures in the system. And there's a lot of reasons. Hemingway said, political opportunists, when their back's against a debt wall, will buy temporary prosperity by debasing the currency and then permanent ruin by finding war and inflation. We've seen a debased currency. We're having a game with reported and misreported inflation, and we're constantly at war. And again, I always caveat by saying, in terms of U.S. policy, I never being disparaging of the men and women who fight for our country or their own countries. In my finding, these are all, and I'll say it over and over and over, they're lions being led by donkeys. I think the policy in Afghanistan was a complete failure. I think we'd all agree. I know Marines who would agree with that, Navy SEALs who would agree with that. I think the Ukraine war was deliberately put in motion with no real interest in a peaceful settlement, even before it started. I think the hundreds of thousands of civilians and soldiers killed is a war crime in and of itself by bad statesmanship from the U.S. and the West. I really do believe. So trying to predict foreign policy or geopolitical fissures, I keep going back to that Hemingway kind of theme, but it's not just Hemingway. It's very common to see financial fissures followed by militant problems, whether that's opportunism. Maybe Putin saw an opportunity under a weak White House to go into the Ukraine now. Maybe in Gaza and the West Bank, they see a less resolved West or a West that's broke its money financially in the Ukraine. Now's the chance to make a move. It's very hard to say. I think with the most recent headline, this is after Afghanistan, after Ukraine, 2 disasters in a row. Now we have a real serious problem in Israel, which is an incredibly important part of the world. It's an incredibly important ally to the United States. What happened on October 7th? Look, it's unspeakable. It's indefensible. Anyone and everyone should know that, regardless of what take you have on an Israeli policy in Gaza and the West Bank. I think that's fairly obvious. The Israeli response was swift and fierce, as expected. Of course, then you see civilian casualties in Palestine, and of course that is emotional and that's heartfelt, and that creates division in the policies. And we see that division from Harvard Yard to Washington, D.C. We clearly have a U.S. that's supportive of Israel. There is some concern about peace talks and whether there's negotiations on ceasefires. But look, there is also no doubt that Netanyahu's political future in that coalition government is contingent upon him being a hawkish and militant and strong response to October 7th. There's no doubt that not only is that politically important to Netanyahu, it's part of his DNA, it's part of his makeup, it's part of his psychology. He's very serious about this. I don't think I have all the answers on what's going to happen there. I think we can all agree, regardless of the highly polarized opinions on Israel and Palestine in this terrible, terrible situation, there's escalation risk because Hamas is horrific as that is. Then you've got Hezbollah in Iran, and then you've got Iran. These are not choir boys. These are not the people you invite to Thanksgiving. And so the idea that you can contain it easily and that you're going to get easy U.S. support is still up in the air. I think we'll get it, but the risk of escalation is very real. And again, I don't have all the answers. I also know that we can debate wars, whether it's in Afghanistan, whether it's in Israel, whether it's in the Ukraine, but money is money and wars cost money. And I think the U.S. has already stretched from years of failed wars and not failed soldiers, but failed wars and failed policies and failed statesmen. I think there's going to be more U.S. Treasury issuance as wars escalate, whether it's in the Middle East, whether it's in the South China Sea, whether it's in Asia, whether it's in Eastern Europe. Wherever more and more wars come to distract and create more war-type economies, we're going to see more IOU issuance that won't be paid for naturally. So we're going to see effects on the commercial markets as well. What's astounding to me when I look at the U.S. and its policies and what's happened to the neocon takeover of our cabinet and our Pentagon and the fact that we have basically 3 Pentagons. I think Mike Rogoff's book on the deep state is fascinating. But I think there was a time, even in World War II, before we knew all the facts of what Nazi Germany really stood for, right after the invasion of Poland, even prior to Pearl Harbor, America still was debating whether we should go to war at all. In World War II, which was a pretty obvious good war, and after Pearl Harbor, a very obvious war. And then after Nazism, we saw how seriously important that war was. In World War I, there was a great resistance to go to war. Two major world wars of which the U.S. played pivotal roles in necessary wars. And yet, since my birth, Vietnam onward, it seems like America is always at war. And none of those wars feel very good in Main Street. There's a whole disconnect. And I'm not talking about the Israeli war. I'm talking about everything up until now. That we're just always at war somewhere. And again, I would say our track record from the weapons of mass destruction in Iraq to the fiasco in Syria to Afghanistan debacle to basically a proxy war in the Ukraine has cost us a lot of money, cost the world a lot of lives, and killed American credibility as statesmen, as military might. And I think for the next leader or the current leader in the U.S. to show that they're meaning something, they're going to have to be more stringent in their war policy. And that scares me too, because wars are devastating. But again, getting beyond the debates, wars are expensive, wars cost money, we're already broke. Our military is certainly strong, and we're not going to cut our military budget. We're not going to cut entitlements. And this goes back, sadly, to the less humane issue of just markets. We're going to go into greater and greater debt, and we're going to have to issue more and more U.S. treasuries. We're going to have to debase our currency to support bond yields. And all these things are connected, as we said from the very beginning. Even geopolitics, crypto, risk assets, the currency markets, the bond markets, the rate markets, and bubbles and pops are all tied to debt. And even war is tied to debt. And so, again, these are all interconnected themes for which no one has all the answers, and anyone who predicts them, I wouldn't trust.
Are you all, again, valid points, and must have you back to unpack those in greater detail, Matthew. Are you suggesting, though, that markets at the moment are underpricing the risk of escalation in the Middle East? And by markets, I mean gold markets, which are supposed to be, safe havens for geopolitical risks. And I mean, we've discussed equity markets at large, but is the sentiment more one of things aren't really going to, get out of hand? And we can keep it focused on Middle East because that could spark other flashpoints.
Yeah, look, I mean, I think it's human nature to always assume, in Germany, Weihnachten sind wir wieder zu Hause. We'll be home by Christmas. Every war will be over quick. This will be fast, or there won't be a war. Poland in 1939, September, they were having coffee. No one thought the Germans were going to march across the border and reshape history overnight. No one wants to think about these things. 67, the war, Yom Kippur, all these things. No one wants to think about until they're there, and then they're there. So I can't predict and say, but I do think we are gold will certainly rise. Even equity markets can rise in a wartime economy. And there'll be a massive productivity in a wartime economy. The difference between 1939 or even 1971 and today is A, all the world is broke at the same time. B, we're in a nuclear era. That's difficult to have strategic uses. There are many experts who would disagree with me. I think the stakes are much higher now. A hot war with Russia or China, I don't know even if you win, how do you win? How do these proxy wars play out in the new paradigm of the 21st century and the kind of weapons we have and the kind of foolishness we have at the Pentagon and our State Department? The combination of all these things is scary. So the risk as countries go broke to try and distract or create growth or through GDP through wartime economies. In a lot of ways, the U.S. is a wartime economy that's not officially at war. But the way we issue treasuries and the way we support our bond market and the way our balance sheet looks like we're at war all the time. So what will another war do to our balance sheet and our credibility? I don't know. And really, who are making the decisions? Who are making the decisions in Washington, D.C. and the White House? Even the weaponization of the dollar was something Barack Obama said we should never do. It would destabilize our currency, would put the world reserve currency status at risk. And this was Obama in 2015. Robert Triffin came to Congress in the 60s, said, don't do this. John Maynard Keynes says, don't weaponize the dollar. Despite all this, somebody in the White House made this decision. I don't think Biden has the IQ to make that on his own. I don't. So it makes you ask, who's really making these decisions? And so these are scary questions I don't have all the answers for. But that tipping point, the Grant Williams that I talked about from day one of the sanctions, the weaponization of the dollar has led to a weaponization of just about everything. Because countries that are broke get more and more desperate, whether it's weaponizing the DOJ, whether it's weaponizing the Wall Street Journal, the Bezos Post, whether it's weaponizing YouTube or Facebook or Google. for political reasons. Everything is getting more and more centralized. And that, as I've always said, is the end result of any broken regime. It's throughout history. You have a market crisis, which is driven by a debt crisis first. Always a debt crisis, market crisis, currency crisis, inflation crisis, and then more centralized control from the extreme political left, name it Bolshevik, or the extreme political right, name it fascist, or pseudo-democratic. But we always see this throughout history. This centralization, this militarization, this weaponization theme is everywhere right now in the world. It's right in the land of the free and the so-called democracy of the U.S. Again, my country, I still love it more than any other country in the world, but it's not the country I studied in law school, civics, constitutional law. Even the universities I went to are unrecognizable to me because I can't speak my mind or take or not take a vaccine according to my own free choice, which is everything the law school taught me to value. Those law schools won't let me in now if I don't get a certain policy that I don't follow a certain way. I just don't recognize these things anymore. That's a sign of centralization. That's a sign of why there's so much social unrest, distrust, polarization. People are reacting to this control in different ways. Those who really want freedom value it. They'll discuss it. They'll argue it left or right. Those who have nothing to lose don't care because they have nothing to lose.
You know, Matthew, I have to then bring up what many are calling is an attack on the very fabric of American democracy as we speak, seeing as you brought it up. And of course, this leads back to trust in the dollar. And we have what the Republicans are calling the weaponization of the justice system. We have all of these lawsuits against former President Donald Trump. And now we have the Colorado Supreme Court disqualifying former President Trump from appearing on the state's ballots in 2024. The disqualification made under the 14th Amendment of the U.S. Constitution related to the Capitol protests, riots, choose your verb there, or noun, of January 6th. It will most likely go to the Supreme Court. We'll see how that plays out. But we have an election next year. And the fact remains we are seeing actions never taken against a political rival in the U.S. before. I mean, whatever side you're on, we have not seen this kind of action taken against a political rival, which President Trump is very much looking like he would be the Republican representative there.
Yeah.
What impact do you see that having on the dollar and how it's viewed in that bigger context of what you were talking about, de-dollarization?
Yeah, I think they're all related. I think, again, no matter how you answer this, you're going to upset half the audience. You know, you don't have to be a Trump supporter to be appalled by the weaponization, in my opinion. And I do know a little bit about law, having gone to law school, about frivolous lawsuits, justifiable lawsuits, using law as a financial or political weapon just to outspend your opponent, exhaust your opponent. It's a tactic. Law is not about a blind woman with two scales and blind justice. It's a weapon. It can be used. You can abuse the due process system in criminal or civil procedures. In, you know, like Balzac said, it's 12 men and women who have average intelligence decide who has the best lawyer or the most money to make a decision. The onslaught against Trump, and again, I think that should be true. Whatever your politics, you should be raising an eyebrow. What Colorado is doing, you should be asking. You know, that famous line from Shakespeare, "Thou dost protest too much." There seems to be a galvanic desire to stop democracy / Trump. You can despise Trump. And believe me, I can think of a lot of reasons why people don't like Trump. I get a lot of the flaws. I'm not here to pom-pom or, you know, support Trump. But there's clearly, as an attorney, as someone who went to a very good law school with Yale Camisar and Dershowitz as professors and left and right, strong and left, but we would all think this is not how the law is supposed to be used ideally. It is clearly a politicization of the legal system. And I think that's fairly scary. And Trump has many things wrong. His argument is to clean out the swamp. There seems to be a lot of people in that swamp that are very afraid of Trump coming into power because he, like Vivek, he wants to cut, or like Millet in Argentina, he wants to cut bureaucracy. He wants to decentralize a centralized state. He wants to cut bureaucracy. He wants to clean out corruption. He may himself be very corrupt. Again, I'm not trying to say Trump is perfect. I'm saying this fear of letting the people decide for themselves. That should be it. Democracy, as Churchill says, is an ugly thing, but it's the best thing we got. The moment you try to take that choice away from the people, if the people want to vote for someone other than Trump, I believe in that. If the people vote for Trump, you have to take your lumps. If he wins, he wins. I'm saying the fact that we're trying before an election to basically truncate the election process through the legal system, I think raises some serious eyebrows. And again, I think all of us, left or right, kind of see that. If you're anti-Trump, you don't care. But I think you should care because it's bigger than Trump. It's showing a sign of centralization. To your question, what does that do to the markets of the dollar? Again, what we're seeing in the little arc of Trump, or we're seeing a little arc of CBDC, or we're seeing a little arc of YouTube or Google or Facebook or Zuckerberg in front of Congress, or the collusion we've seen in weaponizing the media about what the media doesn't talk about, the lies of omission, what the Fed doesn't say. All these things are just more and more signs of that bigger fear about centralization. If you have more centralization, you could centralize or nationalize the NASDAQ and the S&P. For God's sakes, just make it one big 401k for the country, print money when needed, and keep it a perpetual tailwind. Every time there's a dip, just support it. But you'll do that at the expense of your currency, which is what von Mises warned. Every debt cycle that gets beyond its skis eventually ends in the debasement and destruction of its currency, which is what Thomas Jefferson warned and Andrew Jackson warned too. Andrew Jackson also warned against the prostitution of our government at the expense of the many for the benefit of the few. 90% of the S&P goes to the top 10%. We have a feudalistic society. We have capitalism has been replaced by a central bank. We have a Fed-driven market, not free price discovery, not supply and demand. These are all signs of centralization. And again, I'm a patriot. I want to see this change. I'm a libertarian, not a left or right. I'm not a Democrat or Republican. I believe in the basic principles of freedom, free markets, free price discovery, a free press with opposing ideas. I'm in favor of debate that's informed and not emotional, and it's between qualified people of expertise in something who disagree, like Gore Vidal, in his debates with you could see left and right debates, people I totally disagree with, but they're eloquent and they have an opinion, and there's something to learn from that. We're taking that out of the equation, and we're giving what, frankly, Goebbels could do. Repeat the lie long enough, people will believe it. The most unbelievable, it's believable if it's repeated long enough. And I think we're seeing that in a resilient economy, in transitory inflation, in safe and effective, or this is for your best interest, or for national interest, the great panaceas of all corrupt regimes. National interest, that's a carte blanche to do whatever you want. And when the powers of these agencies get stronger, people's voices get smaller. And then you get guitar players in Farmville, Virginia, just singing out loud, screaming out loud and getting 90 million hits because most Americans, most citizens, it's like the definition of pornography in the Supreme Court. I don't know how to define it. I just know it when I see it. 90 million people don't know how to define inflation. They don't know how to define a recession. They don't know how to define central bank policy. They just know they're getting screwed, that they're not winning, that they're that middle class that's being eclipsed. And God bless them. That's the backbone and the heart of every country. And we're insulting them while we argue about strong DXY, weak DXY, inflation, deflation, a ripping S&P. All important. But there's a rot beneath the wind of these wings of so-called GDP debt-driven growth. And in a lot of ways, us who can afford to argue over what wine we're going to select or whether we're going to, duck or cordon bleu or chicken or beef or fish on the Titanic, we're missing the iceberg. The iceberg is debt, social division, social inequality, wealth inequality, a weaponized and centralized democracy, agency-driven bureaucracy, a centralized state. These systems are just not the systems I studied in the heyday of great schools and great educators who could debate and disagree and be left or right without trying to indoctrinate, but let you think critically and come up with your own responses. That's disappearing from Harvard, from Brown, from Michigan, from boarding schools that I went to. You either toe the line or you're out. Hell, at Goldman Sachs, where my daughter, summa cum laude, Phi Beta Kappa from an Ivy League school, didn't want to get the vaccine. God bless her. She didn't do it. I have a huge respect for that. She couldn't go to Harvard Business School because she didn't comply. That takes profiles and courage. Those are the people that are listening to, Oliver Anthony. They don't need to go to Harvard Business School. They just have common sense. I think we all have it. The question is, do we have courage? Do we have courage?
I would love to end on a positive and optimistic note, Matthew. Like you said, you're no fun at a Christmas party, but you're pointing out very, very, very big, very, very real concerns that people need to be aware of. And, in terms of the common sense, parting words of wisdom, what would you say?
Look, again, I'm not on a soapbox to say the world according to Matt Piepenburg is the world, or the gold price is Matt Piepenburg gold price, the stock market. I think what I have to say is I suggest everyone challenge me, challenge their own opinions, always stay curious, sounds very patronizing or condescending, but always try to learn. That's why I love having conversations with Grant Williams or Brent Johnson, or people have different views. We're always learning. We're always curious. The facts are always changing. Your opinions can change with them. I suggest everything that we've talked about here, whether it's gold, whether it's crypto, whether it's inflation, deflation, whether it's a rising dollar, strong dollar, whether it's a recession officially or not, challenge all those things. I'm not here to say that's the absolute truth. That's a philosophical question. I'm saying it's absolutely what I believe. And I'm always trying to question and challenge what I believe. I don't work at Goldman Sachs or for the government, so I'm not constrained by a board of directors or party line. I will tell you what my research and my opinions and my experience suggest. Each of us can self-educate. You don't need fancy schools for that. You need to be curious and need to challenge even your strongest convictions. I do it all the time. I think people that I talk to, whether they're Apple farmers or hedge fund managers, do the same thing. Those people, you lean into the table, you engage in those kind of people because they're not just talking emotion. They're trying to keep themselves educated. Whether that's about geopolitics in Israel and the Ukraine, great. Have different views, but make them informed. If they're just going to be emotional, we're going to get nowhere as a country or as a conversation.
Right. So maintain intellectual curiosity and critical thinking. That's worth its weight in gold. Matthew, we really appreciate you sharing your thoughts with us, some fantastic insights, and I look forward to having you back to further unpack some of the points you made. Thank you so much for joining us today.
Thank you, Michelle. It's always a pleasure. Always.
All right, as always, thank you for watching. Also, a quick thanks to our sponsor, Swan Bitcoin. Swan does have a division dedicated to high net worth individuals, businesses, and trusts to help them understand Bitcoin. The Swan private team offers a comprehensive Bitcoin investment platform with services like institutional level liquidity, concierge OTC service, inheritance and estate planning, tax loss harvesting, and more. For Kitco viewers that are interested, there is a special link in the description of the video, so please check that out. In the meantime, thank you for checking us out again, and we'll see you soon.
On the Spot with Michelle McCory is brought to you by Swan Bitcoin. Swan Private is proud to be your partner on the journey into Bitcoin. Swan Private helps high net worth individuals, family offices, businesses, and trusts. Expert service, real relationships. Go beyond legacy finance. Build your own legacy. Swan.com/wealth.